Hello everyone, welcome to another video by the Ancient Trader. Today is the 11th of November, a day after the expiry. So coming to the previous week, the market was around 17,962 and it went till 18,300 and back to the square point. So I had to trade for only for 4 days. So expecting some sort of volatility on Thursday on the expiry day as well, and also on the next day before when the Fed meeting access was there. So I tried to quit my trade as and when this the market was around 18,150. So this was about the Nifty, and Bank Nifty looked quite strong. And if you can see that the market started around 40,900, which is 41,000, and ended around 41,751. So there was no much retracement in the Bank Nifty. Coming to the trades which I had taken for the weekly basis. So here is the presentation. So I had tested a couple of things. One is this calendar trade, which is nothing but a balanced calendar trade, which was there. So this was nothing but I had sold 18,400 and 17,700 PE when the market was around 18,100, and I had bought 200 points away. So it was 18,400 CE and 18,600 CE on the 17th November buy, and the similar thing was there that 17,700 PE was sold and 17,500 PE was bought. So I tried to match as much as the premiums as much as possible. And when the market moved higher, so I moved this leg part of the leg to 18,000 PE and 17,800 PE, and that was about it. So after that, it was I use certain bit of capital to sell the 18,800 C, which was available at good premium, and I could cash in some of the amount. So this was around 8,255 with the profits on the calendars. And usually what I do is this, I do a 1:10 trade. So when the market was around 18,000, so I purchased 18,000 of the 24th November expiry and sold 17,500 and 18,500. The position remained the same until I started bringing down with 17,700 P, and then I moved this 18,000 P to 18,300 P when the market went higher, and then I sold 17,850 and brought this to 18,450. So I exited the trade when I had more than 1% on this trade. So the capital used was around 30 lakhs. So this was one more trade. And coming back to Bank Nifty, I had a ratio spread where I had done 1:, which is 1:5 ratio spread, and this gave me around a profit of 4,300 on a capital of 11 lakhs. So ratio spread doesn't work out good when the low VIX is present. So this is one of the observations we made. So overall, for the last week, the profits are around 35 plus 843 and plus 4. So it is 47,000 as the profits. And for the next week, what we did was I entered my trades today. So the trades are quite simple. Again, I entered the 1:10 ratio spreads. Basically, about 18,300 CEP for the December series and sold 17,900 and 18,700 at nominal prices. So this is what it looks like. It looks like around 40,000 if it remains within this range, which is around plus or minus 2%, trying to hope that there is some sort of consolidation in the market. But in case the market consolidate just even on a single day, around the market is around 30,000 plus or minus 0.5%, I would exit with 30,000 profits and try to move to the next weekly already. So this is about it. I am running experimental calendar, monthly calendar PE. So where I had sold 18,000 PE and 18,000 PE on December buy. And when the market crossed 18,300, I moved the leg to a 18,300 PE calendar, monthly calendars. Since the VIX is getting low, this is quite reducing. And in case the VIX increases, let's assume that VIX increases by some percentage, the range also increases. So hoping that there would be some sort of profits coming over here, expecting there is some sort of resistance at 18,600. As you can see, the IV is 13.61, which is quite low and makes it a very good case for the future to make a calendar spread for the next week as well. So going ahead, so what else we have? There was this interesting case of HDFC Bank. HDFC Bank rose around 6%, 7% in the intraday today. So I had a normal, let's say that I had 1360p and 1600. So if you can have a look, what was my trade basically? So it was around 4.3 which I sold, and today with the 7% VIX, 7% increase, the market crossed around 16,620. So it was almost ITM, and I had a loss of 25,000 with one lot. To manage this, I have done a couple of things. One is this: I have sold 16,200p, so I closed 13,61360p and sold 1620p, which is nothing but roughly equivalent to the premium, trying to match the deltas over here so that the premiums is there and I could end up in profit. And after that, I did a couple of things. One is this calendar spreads. So I sold a 16,600 CE November series and bought 16,600 CE December series. So this already gave me some sort of profit, and already I did the same with the PE as well. I sold 1560p and 1560p, bought the 1560p December series. So what it eventually did was, initially the range was 15,580 and 1647. So with this calendar spread which is there, it has now increased the break evens to 1561 and 1664. So in within this range, I would still make a good profit. I would try to get out of the trade as long as I get into profit, or the losses go below somewhere around 2-3,000. So then I would quit and move to the put secured put. So this is the disadvantage. If you're doing a secured put, I would have bought it even with the 7% fall, but the CE side compromised my profits over here. Luckily, the losses was around 26,000. Now it has reduced to 12,000. So let's see what would be the profits. If it is in Monday, it was showing somewhere around 6,000. And the day which I would be entering profits is only after a week, if it is within this range. So let's see, I would try to adjust and bring in some money and try to bring this into profit. So this is the one of the adjustment I have done for the triangles, converting a triangle into straddle and a straddle with a calendar spread as well. So this is what it looks like. So this is the adjustment of the HDFC Bank trade, which has gone totally wrong for me. So with this, I end this video. Thank you all.